I'm Anthony Manley from Global Trading Edge, and what I'm going to show you today is a strategy that you can apply directly to your share portfolio or your stock portfolio, whatever you would prefer, that relates directly to real estate. So if you owned an investment property, you obviously would rent that property out. That's why you bought it as an investment. You can actually do that with your shares or your stocks, whatever term you want to use. I'm going to demonstrate this to you. Let's understand what a house is all about, or an investment property as a house or a unit for that matter. So when you actually buy it, you've actually got a house. Now you have to excuse my little diagrams here. What you'll find is here's my little house. Here's a little house, and I'll even draw a little door on there and a little window. So there's a little window. So we've actually purchased the house. What we actually do is we actually borrow money for that house. It all depends. You might buy the house outright. It's up to you. What we then do is we actually look to insure that property. So we actually add insurance to that. Now this is even as an investment property, so most people can understand this. So an investment, let's say for example this investment property has cost us $350,000. So we paid $350,000 for the property. Then what we do is we get an insurance policy against that. And an insurance policy, roughly, let's just say as an example, is $1,000 per year. And that's pretty common what people would pay. Anywhere between $600 to $1,000. Could be more, could be less, depending on what you're actually insuring. Now, what do we do with this property? What we then do is we go and look for Mr. Tenant. So Mr. Tenant is over here, or Mrs. Tenant for that matter. So here's Mrs. Tenant out here. And I'll just draw back over the top of that because you probably can't see it that well. Here's Mr. or Mrs. Tenant waiting for a property. Now most people, they buy properties to rent them to tenants. So as you can see here, I'm going to rent this property to Mr. and Mrs. Tenant. Now, in order for me to rent the property to the tenant, we need an agreement in place. Now that agreement is in the form of a lease agreement. So we actually have a lease agreement in place. To protect ourselves in case they don't pay the rent, we actually get some bond money from them. That bond money, argument's sake, is 4 weeks worth of rent in advance. So let's say $350 a week. That would bring it to $1,400 per month. Now, that's for the lease agreement component of it. This person here, Mr. or Mrs. Renter, and we'll write Mr. or Mrs. Renter beside here. Mr. or Mrs. Renter will pay us $1,400 per month. They were giving us $1,400 in advance in case they decide to slip up on their payments. However, they will continually pay us $1,400 a month. Now that's a great way to look at things. $1,400 a month, will it cover our full mortgage? Well, in some cases, no. Let's have a look at it from a share portfolio. Now, you've got your shares over here. I can't draw shares. If you can help me out here, I'm actually just going to draw a dollar sign here. So these are my shares. This is a share portfolio that I may own. Now, I've got my shares here. Imagine the shares are the house. What I can actually do is insure my shares against loss, just the same way as you do a house. Because if a house burns down, let's say for example this house just burnt down to the ground, we've actually taken out an insurance policy. We've paid $1,000 a year, which covers just the house. It doesn't cover the land. So we paid $350,000 for it. So let's say for example our land's worth $150,000, then we would actually be reimbursed $200,000 to rebuild the house on the land. That's not too bad at all. So that's our insurance. That's what insurance policy does. So that's $1,000. Now, with your shares, you can actually do exactly the same thing. You can actually buy an insurance policy against your shares. So, argument's sake, let's say you paid $30 per share. Now you can see here, this is your shares and we paid $30 per share over here. What we can actually do is we can buy some insurance on that. Again, let's just keep this as simple figures. $1,000 per year. Very similar to our property. Now, what are we going to do? Now that we've got our shares insured, we're going to rent them out. We're going to find Mrs. or Mr. Share Renter. Here's Mr. or Mrs. Share Renter. What are they going to do? They are going to pay us some rent. Now let's have a look at this. Again, you can rent your stocks out for as much as you like. It all depends on the actual value of them. So let's say, for example, we rent these shares out. They're $30 per share. We rent them out for $1,400 per month. Now, if that's not a good strategy that actually grabs you, I don't know what's going to grab you, because you can do the same with shares. If you bought 1,000 of these, $30,000, as opposed to $350,000 for a home. Big difference. However, you are getting the same return. Let's have a look what would happen if our shares went down in value. So if our shares went down in value, what would we actually do? Well, guess what? We've got insurance in place that allows us to sell our shares at $30, even though they may be trading on the stock market at, argument's sake, $28. I have the right to sell my shares for $30. Now, how good is that? Great strategy. Same as what you would do with your house. You rent it out to a tenant. This is a strategy that I apply month in, month out over my portfolio, which gives me additional income, which will get you out of the rat race as well, as it's got me out of the rat race.